are Indian markets so steady when there is a chaos between Iran and Israel? Is crude oil going to be a problem and a real risk in coming times? Will Israel and Iran war will change it and bring chaos for the global economy? Are there any risks that we have to look for ahead? And how is Indian economy staying so strong in such violent times? The conflict that began on June 13 between Israel and Iran is not dialing down anytime soon. But the good news that seems for Indian economy here is that the Indian markets are showing resilience and they stand unshakable as of now. Hello everyone, welcome to Vajiram and Ravi's Simplified. My name is Shubhangi Singh and today we are going to understand that what are the reasons underlying the fact that Indian market are staying strong against the global alarm that has been raised by this Middle Eastern West Asian conflict. So let us begin by understanding about the conflict, which is basically the root cause from where the global alarm has begun. So this conflict started on June 13 where Israel started launching missiles under the Operation Rising Lion, and then Iran later retaliated through Operation True Promise 3. And this retaliation between both of the nations is not dialing down anytime soon because Iran has retaliated again by hitting an Israeli oil refinery in Hafia, which is the most recent incident that has taken place. Now, because of this whole conflict which is escalating and it has raised global alarm, we see that the economies are being impacted, but in case of India, thankfully, the markets have remained resilient and they seem a little unshakable as of now. So basically, the only drop that we have seen in Sensex has been of 0.13%, and the closing on June 18 was merely only 108 points down. Now the question is why this drop is being seen as unshakable and resilient. The reason being, whenever there have been alarming conflicts between nations, be it Russia, Ukraine, or be it Israel as well as Hamas or Palestine war, there has been always a great impact which has negatively affected the stock market. So when the stock market stands this tall and there has been merely a difference of, especially in Sensex, of 0.13%, that means that there are factors working behind that are making the Indian economy and the Indian markets stay strong at this point. However, everything is not hunky-dory because the crude oil on which most of the economies run has already seen a spike of 11%, and this will remain a critical point not just for Indian economy but for the global order as well, because that is where the risk actually lies. We'll be getting into the details of this as well, that why this is such a risky zone, how it is related to the geographical location as well as the economic implications. Now moving ahead, let us understand what are the main reasons that are helping Indian economy in such a stronghold position. The first reason that comes in from here is the inflation, which is at a low point. Whenever we are talking about investor sentiment, it comes from the macroeconomic indicators of an economy. Investor sentiment directly impact the stock market because that is one of the main drivers of any stock market of any given nation. Now that the inflation is lying low, if we see the numbers, CPI, that is Consumer Price Index inflation, it has eased to 3.2% in April 2025, and RBI is projecting that for the financial year 2026, it will remain somewhere around 3.7%, which is in the comfort zone of RBI itself. That means our one macroeconomic indicator, inflation, is absolutely in the comfort zone of RBI, and that gives strength, peace of mind to the investors, and the investor sentiment stays strong. Another reason that you will see that is related to inflation, that the WPI inflation is further falling down. So at the wholesale level also, if we are talking not just at the consumer level, Another macroeconomic factor, if we take into consideration in terms of inflation itself, WPI seems to be falling. 0.39% decrease has already been seen last month, and that again strengthens the investor's mind and macroeconomic fundamentals which are present in front of us. Other than that, another reason whenever there is a conflict, we see a downfall in the stock market is because of the trade relations with the particular country. So when we are talking about Russia, Ukraine, we had trade relations with both of the countries. When we are talking about Israel, Hamas, we have trade relations with and diplomatic relations with Israel, and we have remained a neutral party which has been talking about two-state solution to this particular problem. In this situation, the exposure we have in terms of relations and trade is currently limited, because only 4.4% of global oil supply comes from Iran. One of the major oil suppliers to India is Iran, definitely, but in the terms of global oil supply, Iran remains limited, but the major chunk of supply from Iran goes to China. So the primarily exporter is China, which is present here. So as of now, the investors are very clear, especially for Indian market, that we are not heavily affected, and the data, statistics as well as macroeconomic fundamentals are clearly on our side, and whatever is the crisis that we see, especially in terms of the market, that is psychologically driven. At present, there is no supply crisis as such, so that is why investors have shown confidence, and that is what makes Indian market unshakable as of now. But if we believe that everything is absolutely fine, that would be incorrect. Now, why I am saying everything is not fine? Because one of the major thing that is going to be affected is crude oil prices. This difference you can already see that, as I have mentioned, there has been 11% spike in the prices of crude oil. Now, Iran at present holds around 12% of global oil reserves, but the exports from Iran are limited as Iran has been sanctioned previously already. However, as of now, the oil price which we have seen and it is rising, that is clearly associated to fear. As I have mentioned, that it is psychologically driven, and it has nothing to do that there has been a supply shock, and no supply shock as of now is anticipated. The only real concern that lies in front of us is if Israel starts to target Iranian infrastructure, there might be global supply hit, and that will hit the push button on the crude oil prices, and we might see immense rise in here. So this could push the prices beyond $100 per barrel, and it might impact global economies across the global order. As we have mentioned, most of the impact that we are seeing, it is psychologically driven through fear. The market numbers do not support such fear as of now, but something that remains real is in terms of crude oil. But we need to also question that why inflation has not reacted yet. If things are boiling up and things will be getting costly, because of what? Why there is no reaction on inflation, especially for Indian economy? We have two major reasons here. First, that we hold good buffer mechanisms, that Indian government, so as to ensure the impact on consumer prices comes in late, even if there is a crude price spike. Second, we have strategic reserves. We also have diversified sources from where we import crude oil, and there have been many fuel pricing controls that are already in place, so as to ensure in short term, even if there is a crude oil price spike, we might be able to insulate the consumers from that spike through these mechanisms. Even if the crude oil price is rising, what is the reason that inflation is not boiling up directly? First, the rise has been meager. Second, there are multiple mechanisms in place at the level of the government as well as in terms of policy, which make sure that there is some sort of short-term insulation to the consumers so as to adjust to the changing prices as well. Other than that, experts have clearly mentioned that this particular current oil price hike is not demand driven. There has been no change in demand, and that is why immediate inflation is not hiking. And wholesale and consumer price inflation, as I have mentioned, WPI as well as CPI remain well within RBI's comfort zone. That is the range that they have picked for inflation, that is 4% plus minus 2. That means the range is from 2 to 6%, and it is well within that range. Now, to the last aspect, but the most important aspect, that why we are considering crude price as the risk. Why we are considering crude oil price as a risk. So, if you see the graph given here, it basically shows the price of Brent crude oil, which is a variety of crude oil. Tell me in the comment section, there are two varieties of crude oil. One of them is Brent, which is the other one. And Brent crude oil, if you see that, then you will find in the period of last 1 month, this is the spike that we see as of now. And this spike has also been just because of the demand driven factors? No, they have been because of the fear that there might be a supply shock. But why is that fear? What is the reason and how we can mitigate those risks associated with those fears? So if there is, as there has been a direct strike on Iranian facilities, if there is a direct strike that takes place on Iranian oil facilities, it will disrupt supply of oil to China, which will impact the main major economy of the global order, that is Chinese economy, and then it will create a domino effect across the globe. However, if we see a sharp rise in oil prices, that is when Indian markets might jolt, and that is only possible when, because if the price rise, India's import bill will increase. Again, as of now, also one of the major import items in India's import bill remains crude oil. So if the prices of crude oil increase, we will going to see a higher import bill. It will also widen the current account deficit. If we talk about current account deficit, it takes into account the trade of goods and services of the country, of the given country and the rest of the world. So if we are importing more and exporting as we were, then definitely the current account deficit increases. And if the prices of crude oil remain increasing, not just in short term, rather in long term, the WPI and CPI, which are comfortably placed as of now, will not be in that zone, and we will see WPI and CPI inflation rising as well. Now, why will all this happen? Why does Iran have such a strong hold? And if Iranian facilities are struck, there is not just one reason that it will impact Chinese economy. There's another reason associated with it, that is the Strait of Hormuz. So if you see this particular strait, this is the Strait of Iran, and this Strait of Hormuz basically is responsible for 20% of global supply of oil and 25% of global supply of LPG and CNG. Now, if this is blocked by Iran, it will create a great impact, and definitely not in a positive way, on the global economy and the crude oil prices, because as of now there has been no demand driven and supply shock driven inflation, but the moment this is obstructed, there will be a supply shock. And if in coming times we see that this escalation does not dial down, this is one of the possibilities that we can see, and then it might not just affect the crude oil prices, it will go ahead and impact our equity indexes also, our Sensex also, our ETFs also, and across the Indian market you will see the impact. Now my question for you is that if Indian markets have been so resilient to this particular war, what are the steps that we have taken in past to make sure that Indian economy becomes resilient to the supply shocks or the global economic events that we see outside our country? Now that was all from my side. Thank you so much.